Hey everyone, it's Rachel here, and I want to talk about financing and understanding how much money a buyer needs for a down payment. Great news is you don't actually need a whole lot of money to buy a house, but you do have to be able to afford the monthly payments. So when you're working with your lender, have them go through that really detailed pre-approval process. Don't rush it. Don't ask for the super generic letter just because you want to go out shopping with them. Make sure they've done a very thorough buyer consultation with them so that that borrower for them has a really good picture of what they need. That includes how much they need, not just for the down payment, how much they need for closing costs, and also anything else that might be coming along. You know, they're going to have hazard insurance, and if they're paying for the title policy versus the seller paying for the title policy, all those kind of things vary. So make sure that your buyer and their borrower, your lender partner's borrower, has a really good estimate of the closing costs so that that buyer knows how much they have to bring to the table and can get to closing. Now, how much does it actually cost to get into a home? Well, that kind of depends on the loan program. So there are various different types of loan programs. For example, veterans programs, the VA program, you can actually get in for 100%. FHA usually is like at 3.5% down. So that's going to be 3.5% of a down payment plus closing costs. Okay. Now, there are also some programs, even if you're going on conventional, you can do 5% down, but some lenders have some other programs at their disposal that are available to help with like down payment assistance. So those kind of programs are very helpful because they can actually cover some of that down payment and help you even get to 100% loan amount on a conventional loan. Now, keep in mind with those programs, there are income limitations. So if your buyer makes too much money, they're not going to qualify for some of those down payment assistance programs because they probably don't need it. The other thing to factor in is the lower amount of money that you put down, the higher the interest rate is typically going to be, because that is a higher risk loan for that lender. And so when you put less down, you're taking more risk on doing a loan to that borrower. So you're also going to have other things show up like mortgage insurance and things like that. They're going to be added to their monthly payment. So there's a lot of pieces that go in place. Make sure you talk with the lender and get that borrower really qualified before you go shopping.